The forex market never sleeps, and neither do I. So let's see what today's charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top podder on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel, and I will see you on the charts. In today's video, I will be speaking about gold. Now, as usual, first I will be covering the technical aspect that we currently have on this commodity. Then we will go and see what we have from an order flow perspective by checking the commitment of traders. So basically the COT data, which is what the non-commercials and the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Also, we have just started the Black Friday month. It has never been this easy to join the mentorship program. You have a massive discount and the possibility to get a full refund directly in your trading account because we have partnered with the forex broker Blueberry Markets. So I really suggest that you go and check it out. The link is in the description. And let's start this analysis. Now, here on the monthly, what do we have? On the monthly time frame, we have a very strong impulse to the upside, followed by this complex correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market has been testing the Fibonacci levels one by one. First, the market went and tested the 0.618 golden ratio of the Fibonacci taken on this monthly impulse. We can see how the market tested it here and again here. And at the moment, we can see how the market has successfully broken above the 50%, tested it, and currently we are rejecting the 50% to the upside. So here on the monthly, everything seems quite bullish. Dropping down on the weekly time frame, what do we have? Now here in the weekly, we can see how the market has just respected the very strong historical structure level that we had spoken about in our previous videos. In fact, from here the market had started all this move to the upside, break to the upside. At that point, this previous resistance was turned support here, again support here, again support here, and again support here. After the break and retest, when the market was around this area, I made a full breakdown explaining all the reasons for which we expected this rejection to the upside. And in fact, that is exactly what the market gave us. And by the way, I will link this previous analysis in the description so you can go and check it out for more free education. So here in the weekly, all the structure is bullish and we can expect more continuation to the upside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. We drop down on the daily time frame, and what do we have? Now here on the daily, we can see how the price action has been quite clear lately. In fact, we have seen multiple structure levels that the market tested and rejected and respected quite precisely, as you usually expect in a situation like this. In fact, if you remember, I made a full breakdown of gold when the market was around this area. I explained why we expected this rejection to the upside. Again, here when the market was around this zone, I made another breakdown explaining all the reasons for which we wanted to see a move to the upside. Then the market started creating bearish structure. I spoke about gold a couple of times during this correction, explaining why if the market would have once again shifted back to a bullish structure, we could then expect a new daily higher high. And in fact, that is exactly what the market gave us. But anyway, I will link all these previous analysis in the description so you can go and check them out for more free education. But at the moment, what do we have here on the daily? Now, from a daily perspective, we can see how the market has just created this overextended W formation. Now, generally speaking, after the creation of an overextended W, what you want to see is the market create a correction at least to the 0.382 of the Fibonacci taken on the daily impulse, and then to print a continuation to the upside, meaning that in a situation like this, what we can expect is short-term bearish price action and then a longer-term continuation to the upside. Now, if we go and see what we have from a COT perspective, so what the big players in the market are doing, so the biggest speculators and hedge funds, etc., what we can see here on gold is that lately net positions have been increasing. We went from having 168.3k net positions up to having 215.1k net positions, with currently 311k longs compared to only 95k shorts. So we can see how shorts have been decreased and longs increased from an institutional perspective on gold. Therefore, everything seems pretty bullish. So if we will see the market actually provide that correction that we were speaking about earlier when we were looking at the market from a technical perspective, so if the market here will correct to the 0.32 of the Fibonacci taken on this daily impulse, inside of here, this is a very good zone inside of which we could be looking for the potential continuation to the upside. So if we will get the correction here, how we will be approaching this potential longing opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, after a break on the retest inside of here, we will be monitoring price action from an intraday perspective, and if the market will shift from an intraday bearish to an intraday bullish market, at that point we will be adding gold to our watch list, and as soon as the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside, and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a potential higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.